Hello. Welcome to my channel, my dear friends. My name is Vilash, I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So, my dear friends, this is the hourly chart, our beloved hourly chart of gold in front of us. And after a high of 278586 yesterday, market finally closed around 2770. So this was the last traded price. And overall, if you look at the chart of gold, then the market is very bullish. So if you have any ongoing buy as a swing trader, you can hold your buy positions because in this present condition, 2800, 2805, okay, is very much possible. After 2800, what will happen? It's very difficult to tell. We will discuss that later. Okay, but as of now, it seems that market is bullish, so it will be best for us to hold our buy positions with our trailing stop losses. So let's look at the market sentiment first. Gold hits 12-week high. Gold nears record high on safe haven buying and weaker dollar. If you're wondering why gold is bullish, then this is the reason. Dollar is weakening, and because of the safe haven demand, gold is bullish. Gold prices rose early on Friday, moving closer to record high set in October as the dollar weakened and safe haven buying rose on Donald Trump's trade to upset the global trade. You must know the name Donald Trump is enough to bring volatility to the market, and this is happening. The rise comes in the wake of a weakening dollar and increase in safe haven buying after Donald Trump used the first week of his return to office to threaten the launch of a global trade war by imposing punishing tariffs on China and US allies. So market is little worried right now. Will there be a global war? And this is the reason why we can see upside on the chart of gold. Okay, and if you look at the chart of dollar, we have discussed in our previous videos also that the structure of the market is not positive. Dollar was struggling around the crucial support of 108 107.75, but it was evident that dollar would fall, and we can see dollar is going down on Monday, Tuesday. If dollar continues the downside, don't be surprised because dollar is under pressure right now. If dollar is under pressure, then obviously we will see further upside on the chart of gold. Couple of days ago, around 2 weeks ago, I guess, I told you guys that it is almost impossible for gold to break 2800, okay, because we had good number of contracts at 2800. But yesterday also I showed you, and today also I can see that number of contracts at 2800 are reducing. It means that, okay, if 2800 was the wall, then the bricks are slowly falling. If the bricks are slowly falling, the obviously the wall is losing the strength. So if market breaks also to 2800 after 1 or 2 days, I won't be surprised because the contracts data, the options chain is clearly showing us that the number of contracts are reducing, which is not a good sign. Okay, now let's look at the chart of gold. Okay, so this is the hourly chart, but at first I would like to show you the daily chart. Okay, on the daily chart we can see that after the breakout, after this breakout, gold has gone up. But the thing is that, okay, we got a clean upside after 2600, or from 2600 onwards. Okay, market has shown a clean upside. I'm not talking about a trend of the market. Okay, overall trend is bullish, that we can clearly see. But what I'm showing is that market has shown a clean upside after 2600. So after hitting 2800, okay, after hitting 2800, if market comes for little retracement also, I won't be surprised. I'm not saying that after hitting 2800 there will be a complete trend reversal of 100 $200. No. But as there was no proper retracement, so there may be a retracement of 30 to $40 or 300 to 400 pips on the chart of gold. Okay, rest time will say. We can just assume that this will happen, that will happen. After all, market doesn't listen to anyone, isn't it? And the only way to make money in the market is to go with the flow. That's also a bitter reality. Okay, now let's look at the trading opportunities then. So as we have already discussed, if you have any ongoing buy, you can continue with your buy position because the market is very much bullish. And if you're looking for fresh position in the market, then respecting the ongoing trend, it will be better and safer for us to buy at dip or buy at retracement only. So the market opening is going to be very important. After the market opening, if you see gold is showing correction downside, then observe the market around 2663 to 60. This is our first support on the chart of gold where we can look for a bounce. Keep in mind this is our first support, so the volume should not be high. Usually we don't see much volume or craziness in the first half of Monday. So if market acts like a normal Monday market, we can expect 266360 to provide support to the market. Why we're expecting 266360? Because of, you can say, FIBO plus previous resistors will be working as support, and moreover we have the 50 moving average. So if we combine all the factors, this particular blue box, okay, seems to be a good zone for the market. If it doesn't work, for example, if you see the market is standing at 266360 with a big red candle, then obviously it's not going to work, isn't it? In that case, our second support will be around 2748 2750. Why 274850? Because 50 is a round number, and moreover we have the 100 moving average. So at this moment I think these are the only two levels where we should be looking for buy positions only, because right now we don't have any news that will bring a complete trend reversal. Because for a trend reversal we need a big news. Right now we don't have any news, so chances of trend reversal are very less. During the weekend, if any news comes out, that's a different chapter. But while I'm recording the video, we don't have any news, so the market is still bullish. So in this situation, buying at retracement or buying a dip is the best trading strategy for us. एंड माय डियर फ्रेंड्स, अगर आपको हिंदी में वीडियोस चाहिए, मेरा जो ट्रेडर नेक्स्ट डोर चैनल है वो इंग्लिश चैनल है। हिंदी में अगर आपको चाहिए तो प्रियंका टॉक्स जो चैनल है मेरी वाइफ का चैनल है, आप उसको सब्सक्राइब कर सकते हैं। मेरी वाइफ यहाँ पे रेगुलर वीडियोस अपलोड करती हैं। आपको लिंक में नो डिस्क्रिप्शन में लिंक मिल जाएगा, ठीक है। If market doesn't come for retracement, then obviously buying at breakout is possible, but here we have a catch. Yesterday gold made a high of 2786 and the previous high is 2790. So if gold breaks 2786 on Monday, then again around 2790 there will be some resistance. If you want to take the risk, you can go for it. Okay, for example, if you see that there is a sudden buying power in the market has formed a big green candle, then market will break 2790 and market will just move higher. That's a different story. But if there is not much volume in the market, for example, if you see market going up with candles like this, okay, then obviously market will face immediate resistance around 2790. So if you are planning to take a buy at 2786 at breakout, you can go for it, but be careful around 2790. Later on, if market breaks 2790, then you can go for a breakout, but be careful, because 2786, 279091, this area is going to be a complicated one. Personally, I feel that 2786 to 2800, this area is going to be a complicated one. If market shows a big green candle, then only I'll be going for a buy at breakout, otherwise I may just avoid. Right now, let's wait and watch. Time will speak, the volume will be important. During the first half, if market goes up, then obviously chances of market breaking 278690 at once is a little bit dicey. Okay. And later on, if the same area 2786 becomes the support, because price action works like this, previous resistance becomes a support. If it becomes support later on, then we can go for a buy, but buying at breakout can be tricky. Let's wait and watch. Let's wait for the market to open. That's all from my side, my dear friends. Thank you so much. Bye bye, take care, love you guys.